Hey guys, it's BlockchainBrad. Today I'm here with a superstar in the crypto space. His name is DataDash. You also may know him as Nicholas Merten. He has a lot of experience in the space, is a TA phenomenon in terms of technical analysis, and he's got a lot of years of experience, 7 in fact, really knowing the space, having worked also in the Silicon Valley. So Nick, without further ado, thank you, mate, for being here. I really appreciate your time.
Brad, thanks for having me, man. It's a pleasure.
Likewise, mate. I've been wanting to talk to you on camera for a long time. We have been friends in the space, chatting behind the scenes, learning about different concepts and ideas, blockchain related, of course. But mate, tell us a little bit about yourself. Obviously, get this asked this in every interview context, but it's interesting. You're interesting, and what got you into crypto?
Yeah, so it's a long story. I basically, as you mentioned earlier, I've had about 7 years of experience in finance. I got my kind of upbringing back in 2011. And at that time, I was just passionately learning about everything. I was studying finance, economics, geopolitics, just understanding almost what many people would call like a macro view of the world and just trying to get a big picture of everything. And man, I couldn't stop learning. But the biggest thing that really captivated me was finance. I really loved understanding how money worked. And I went down the rabbit hole of learning about what happened in 2008 and understanding central banking and monetary policy in that case and how much of a large role it played in our lives. And I kind of built that correlation that, you know, the rules of the game in regards to money were so important because money does drive the world. So for a long time, I not so much in a depressing sense, but I kind of became cynical of the world in the case like many libertarians do, which is kind of the rabbit hole I went down at the time of the traditional banking system and financial system. And I was really looking for alternatives at the time. And just by chance from watching YouTube videos like I did every single day, I happened to come across a video back in November of 2011 called What is Bitcoin? And at the time, this video, which now has millions of views, had like 30, 50,000 views. I can't remember. It was very small.
So you were quite early in the game of
well, I was, yeah, I was early on in finding about the name Bitcoin, but there's a catch to my story, which I admit in full humbleness and honesty. I basically had watched the animation. It was about a 3-minute animation. It's very kind of like simplified and kind of dumbed down for the average person to understand. But basically explains what Bitcoin is. And it was using these terms like decentralization. And that to me really stood out. I was very excited about that. But there was these things like mining, for example, that kind of threw me off where I was like, you know what, look, this sounds a little too good to be true. And I made a very big mistake. It's something that I'll always live by and always, you know, kind of slap myself in the face for. But it was the fact that I didn't actually go to the website and read the Bitcoin white paper. I actually went to see what people were paying for Bitcoin because I heard that these things were being traded.
I see. Yep.
Yeah. And I was a trader at the time. So me with my speculative mindset, I'm like, I wonder what people were paying for this. So I went to go see it and I looked at Bitstamp and it was trading for about $3 at the time. Okay. And I remember saying to myself, who in the right mind would have, you know, paid $3 for a digital coin or token? Like it didn't make sense because I had no idea of the proof of work and the mentality behind Bitcoin and what it really offered in becoming your own bank. Right. But years later, I kept up with it. The Silk Road came around, all these things and major price fluctuations. And finally, back in early 2016, I was like, all right, I need to look into this. I need to understand what Bitcoin is. So I looked into it. I read the white paper. And as I mentioned, it was a slap across the face. It completely rechanged my outlook on the potential for finance to change in the 21st century. And really got me excited.
I really appreciate, you know, your narrative, you know, what got you into this whole ecosystem that is, it's evolved from not just BTC, but now a whole array of different layers of technology, potentials, DLT as we know it, blockchains involved. But what's interesting also is that you came from that tech premise. Because obviously, Nick, we talked to a lot of different people in the space. Many are coming in with the more of an MM, you know, that motivation for money. And that's fine, no problem. But it is refreshing to hear that you genuinely were coming in with that mindset of you're trying to revolutionize something from the ground up with technology that can essentially empower people to, you know, have more autonomy, have more control.
Yeah. I think in 2017, we saw a really big rush of people who obviously want to make money. And honestly, you know, coming from a financial background, I understand the desire to want to make money or be financially stable. But man, Bitcoin sparked something in me that no stock had ever sparked in me, that, you know, no investment had ever gotten me really excited about. Because when you really understand just how important cryptocurrencies are, not so much to the United States or the Western world where we have a little bit more of a stable banking system and stable currencies, what it means for people in developing economies and corrupt people living under corrupt governments, I mean, this is serious game-changing stuff, especially in the application and my belief of money. But as you mentioned, we're learning now that blockchain or distributed ledger technology of any sort can really be utilized in a variety of industries. I'm interested in supply chain logistics, cutting out middlemen in the field of legal and regulation. I'm very excited to see where we can take this. And I think one thing that's always important to point out here is that just how early we are in this, because it seems like we had our dot-com bubble back in 2017. But the fascinating thing is that we're at less than 1% of global adoption for cryptocurrencies.
Exactly.
And that's not even just.
And we're also at a pre-utility stage as well, Nick, in many respects.
Mm-hmm. Yeah, I mean, to be fair, these things that we're trading, these cryptocurrencies, they're really not functioning as currencies right yet. People aren't using them in currency transactions, except for a few people across the world. There are some areas of the world that are using it, but it's not the majority of holders are not using it as money. Mm. And then when you talk about most of these ICOs that have come out, there could potentially be some utility and some real commercial application, but we haven't seen it yet. Right. There's been yet to be any killer dApps just yet. So I still hold my belief. That I'm really excited more than anything about the money.
I couldn't agree more. I'm sorry to interrupt, but obviously we share the same philosophy of evangelizing the potentials of this technology. But what is crystal clear about you, Nick, is that you are not a maximalist by any means, in that you obviously are a proponent of the technology, but is it fair to say you also see the potential of things beyond it?
Oh, absolutely. Yeah. So I think Bitcoin maximalism is a little, for example, like I understand where a lot of Bitcoin maximalists come from because I've talked to them, and it's this kind of constant feedback loop where they come back to Bitcoin with the improvements that it's making, and they see some of the failures of projects that take different alternative routes. But the thing about me is I believe that much like in the traditional world, we're not going to have one currency because Bitcoin still has a lot of flaws. If you're going towards that Satoshi vision of peer-to-peer digital currency, and even if you want to, I'm not even getting the argument of Bitcoin versus Bitcoin Cash.
But don't worry, we'll get there. We'll get there.
Yeah. I mean, well, the one thing is like, Bitcoin, for example, if you want it to be a store of wealth, you also want to have fungibility and privacy, right? Those are key features that people want, and Bitcoin is still yet to get there. Right. And if we want to get crypto adopted over the next decade, we might need to take alternative routes. And there are also just different features that Bitcoin might not support that people would want in a currency. And some people,
Nick, given your voice, given your position, you are arguably number one in the crypto space regarding, your position as a YouTube speaker. You're well respected around the world, in the crypto domain for your conferences and just for your voice in what you do stand for. What is interesting is that you also, you challenge some of this maximalist approach, this Tone Vaysian sort of concept, because no doubt you get a lot of backlash for it.
Yeah, I mean, well, I know there's people like Tone Vays, for example, who hold those very core beliefs, and I respect them for their stances and everything, but I think it's a little bit arrogant to think that there's going to be one protocol for the whole world to use. This isn't like the internet. The internet, for example, was a foundation for a variety of applications to be built on top of it. And in regards to cryptocurrencies, whether it be, like you've mentioned, more utility-based or just simply currency or store of wealth plays, you're going to have so many different types. People who want different degrees of privacy, who demand different degrees of scalability and fee payments on transactions. Some people don't want to pay fees. And some people want different degrees of trust as well. Some that are more centralized and some that are more decentralized.
Right. And Nick, in that respect as well, let's talk a little bit about the layering of the technology, because we, as you know, we had the layer 0 and we move up. So do you think we're still at that infrastructural phase in the context of pre-utility?
Yeah, I think we are. I mean, you can see, for example, people are starting to explore layer 2 solutions that might expedite things, but I think we're still at the time period where when we're talking about engaging in cryptocurrencies, we're talking about using crypto, and that shouldn't be the case. Exactly. It should be simply that we're transmitting value of some sort. It should feel integral. And I think Andreas brings this up, like, we'll know Bitcoin and cryptocurrencies are mainstream when I know the price of a cup of coffee right off the top of my head. I don't have to think, I've got to check my Coinbase wallet or, my crypto wallet and calculate how much, my cup of coffee is going to cost.
Sure. So, and what'll be exciting as well is that you and I will know that certain products and services operate on the blockchain, but arguably the other component of value is the seamless nature, and also the invisible construction and functionality of the blockchain for the mainstream user. They won't know it's happening.
Yeah. I mean, we need much more functionality before we can really, not only in the sense of scalability, which is a huge topic, I think, back over the past year, but in the sense of actually building governance models building a treasury that can help to sustain these ecosystems over the long term, because a lot of these blockchains are trying to build, if they're public blockchains, they're trying to build digital ecosystems that remove trust, and in this case have some roles of leadership that can help push the protocol forward. But providing those resources are essential as well through a treasury model, which is something Dash has done and a lot of other projects as well. A lot of ICOs are starting to realize they need to do things like that.
Absolutely.
So,
and and certainly they're also trying to connect with enterprise, link things like products and services upon their open source protocol, which I want to talk to you about later. But Nick, you're known for your TA skills as well. You do that consistently. You discuss it not just obviously related to crypto startups, but the mainstream. You're prominent in Wall Street sort of with stocks and shares. So talk us through TA generally. In your viewpoint on TA as the narrative we see now, especially given that things just aren't yet in that open market phase that represent true utility.
Yeah. Well, first off, I appreciate the kind remarks. I'll be fair. It's not only from the criticism I get from some people, but I'll be fair. I'm not the best trader in the world. I'm not someone like, as you mentioned earlier, like Tone Base, who's much more active. But I do understand the major fundamentals of TA in this case. And in regards to crypto markets and how TA plays a role, technical analysis is obviously a very subjective field. But the thing I always really try to push to people is that what matters in crypto is that markets are liquid, and when they are liquid and people can't simply manipulate them like they can now in this very low volume market, TA is extremely relevant and extremely relevant. Not to mention, it's basically these simple forms of TA. A lot of people try to overcomplicate it, and they use a variety of indicators, like 6 or 8 indicators, and they clutter their chart. Really, it's a matter of using simple moving averages, using the RSI for seeing if something's overbought or oversold, and simply doing what's known as naked trading. It's a very funny name, but it's basically where you look at a support and resistance, simply looking at price action. You don't need any indicators. So those are like my 3 main things that I like to use.
So fundamentally, it's that KISS principle of keep it simple, stupid, so that you don't, especially now, Nick, if we moved into, more greater empirical evidence of things functioning, as we were discussing before, would that also enable more complex mechanisms for the TA, or would it still be at that point even a relatively simple approach?
So you're saying as the space continues to develop, as the market gets larger? Yeah, I would say as the market gets larger, when there's more active institutional traders, it's going to get a tad bit more difficult, at least to trade in the short term, because you're going to have you already have a basket of algorithms trading this market right now. But when you start to get hyper frequency trading and institutional algorithms in the game, it's going to be a little bit different when you get Wall Street in there, and you'll start to see it'll change very similar to how FX markets and equities did over the past decade or so once they became mainstream popular. But then again, you can always combat it. You can build your own algorithms, or use other algorithms that are out there. I know some exchange
in the bear, and once again, sorry to interrupt, but it seems like that's quite prominent right now, Nick, in that because of the bear and a lot of the market movement stifled by liquidity issues, many are moving to more of this quant trade. Certainly groups of people around the space are really focusing on algorithm designs to focus there. What do you think about that right now?
I'll be honest, I think this is something that, as much as I was saying people can do that, I'll be fair making this point. I believe that most people shouldn't trade personally, unless you're really willing to put the dedication in. And even when it comes to algorithms or trading bots, there's a good point to keep in mind, and that is that if someone really had an amazing trading bot, they most likely wouldn't be selling it to people. They would be using it by themselves and concealing it from others. Unless there's something that's quite generic in this case. But I think, honestly, unless you can build your own algorithm or you can build your own trading indicators where your algorithm uses those, I think you're going to be tough out of luck, especially in this market. This market's very hard to guess because of the lack of liquidity. I
think it's good advice. I personally know almost nothing, so sweet FA, about TA. My passion's in FA, fundamental analysis. What about you? Do you focus any of your time in the fundamental aspects of the technology, or do you, obviously we've been friends, we talk about this sort of stuff a lot, but do you really do the deep dives now?
Yeah, absolutely. So anytime I make a major investment, not to mention something for the long term, I want to make sure I know what's in my portfolio when I'm, investing in for the long term. But when it comes to doing like investments in ICOs, I really don't dabble in them right now. There was a short time window where there was like 1 or 2 that I invested in, but that was because I was an accredited investor for a little while. But
oh, okay. My apologies.
Yeah.
So in that respect, you also were able to invest in ICO as much as I can, as an Australian. So it's you're completely
for a
open.
very short window. Yeah. Outside of that though, no, I really didn't dabble much in ICOs because for me, many of them didn't seem worthy of investment. It was very kind of, flashy. It was whether or not they got listed on exchanges. And again, it was pretty much tied to speculation in this case. I think most people in the ICO space thought that. For me, I tried to at least keep a little bit of a fundamental value play on it where I would actually try to focus on the fundamentals. But and for most people, it was simply just a speculative play. And as you and I have talked about, we learned going through 2018.
Yes.
I mean, it was completely wild as I started to get engaged in the space and I started to talk to people who were investing in these projects. It was like every week, there's the next big thing, there's the next big thing. And it was the same exact system where you started to see that these projects were linked in with the same middlemen who would get the exchange listings and this really dark system that I didn't know existed.
Totally agree. And having been someone who bought a substantial number, or I did buy more than 10, I will say that, ICOs during that time period when I thought, to be honest, that the technology white papers ruled the world, for my world anyway. I spent a lot of time researching and the best of my ability, Nick, to ensure, essentially I could invest in those pre-utilities because that's what they were. Entirely risky for sure, because you were not getting a security, by design. That was the problem actually with part of them. But the other issue is you simply had no rights. You had no access to anything, and you certainly had no idea if it was going to work. And coupled with that was also the fact that many of the white papers for different projects were actually baseless. They were just written by other people that weren't, and then essentially there were scams in quite a substantial number. So it behooves us really to understand some of the inherent problems, I think, of that time period when it was just too easy for startups to be baseless and make a quick buck. So I think we learned our lesson from the ICO, but that's not to throw the baby out with the bathwater, which is something I want to get more into in this interview. But with regard to the tech versus hype, I suppose that's a perfect segue, Nick, because we now see right now projects such as BTT come to the fore with the Tron and Binance saga, whereby there is a reasonable argument out there that it could in fact be hype driven initially, as opposed to a tech premise. So what is your view on the imperative, whether we should be looking more towards the tech?
Yeah, so I was quite neutral on it. So basically, I talked about it in a recent daily update when the news came out, and I took the positive and the negative. The positive was that more than anything, from what I know of Tron, it's trying to become a distributed or decentralized media platform, and BitTorrent seemed like a good fit. It was interesting that they actually took funds to acquire the BitTorrent team, so they didn't actually acquire the protocol, which is obviously decentralized, but they went about acquiring the team in this case, and they're trying to find how they can integrate that into Tron. I thought that was an interesting match if they were going to do anything, and not to mention it's a good target market. So you're going to bring on a lot of users in this case that would come in with the excitement of this platform succeeding and the token succeeding.
Right.
The thing that I saw as well that provided some value for the token is that it could be a payment gateway for seeders, which is an issue sometimes when you're torrenting. I think people would have disagreements. It depends on what you've torrented before, but when you're torrenting information, you have to depend on seeders to fulfill those requests.
Yes.
To transmit the information. But a lot of the times, usually people will just seed it freely and they don't charge anything. But there's a rare occasion where someone won't, so that's where the token come in. So that was the positive I saw. The negatives I saw is I think that's going to be an issue. When people are getting paid to facilitate content, especially that might be illegally obtained, that's one thing I was worried about. Then again, you can't really stop it, but I think an ICO being conducted and that token value being used for that, big legal ramifications, because you can stop the team who generated the token and you can get involved in that. But the biggest worry I have is what we just talked about, which is, look, I don't know Justin Sun personally. I don't know, the ambitions of what they're trying to do. It might literally be all in good faith, but the same exact hype train is coming back, and it's this wave of exchange listing. Obviously, right off the bat, Binance, they did a launchpad on Binance.
Exactly.
Right exchange, right brand behind Tron, which already had one of the biggest waves back in 2017, completely built off hype and potential partnerships. In this case, and everyone thought Tron was going to be partnered with Alibaba. It's that same kind of speculation coming back, and I think people are thirsty for that because it's a very sad market right now. It's a bear market.
And could it be, and also Nick, one of the issues was also the bottleneck. I mean, let's be real, that we saw this happen with ICOs. Everyone, all the retail investors were desperate to try and get into these very high projects, couldn't get in. The bottleneck was a problem. Also, the stake in which these entities, whether they be Tron or whether it be Binance, the means in which they can have some of that capital from this hype is also a really big issue, because that adds a layer of centralization into the mix. And it's an irony, because it essentially means that it's really potentially manipulating the people using this crowdfunding mechanism to advantage themselves. And that is a really big problem all of us are trying to clean up as much as possible. But with regard to, once again, moving back to that hype-driven system, where is the proof? Where is the proof and accountability for the technology? That's the biggest issue. And fundamentally, do we even need a friggin' token for this project?
Yeah, I don't know. I mean, I think most ICOs and the tokens tied to them I think most of us came to the later realization that they're not going to be worth much unless they either A, can provide some real utility, or B, people in a longer term phase tend to find value in it. And that's the same as how currencies build value in a sense. They build trust, or those currencies can be used in a transmission of business in some way, shape, or form. Mm-hmm. I don't know. It didn't leave a good taste in my mouth that this is still going on. And I think that we still have yet to see, because we have all these ICOs that have already come out, that we have yet to see a successful model, yet we still have the next big ICO coming out. It worries me. It's why I stay away from ICOs now, and why I don't cover altcoins in many cases. Why, even though I talked about BitTorrents, the news around it, I didn't, I'm not giving them any more free coverage.
Well, I certainly, I'm happy to give them coverage if it's objective and we can discuss it, but certainly I'm not an investor, and I'm certainly not here to promote what they're doing. But Nick, on that, in that respect, with regard to what has happened, clearly there's a very vocal number of people who are speaking against this move. But is it possible that we also can utilize ICOs for good? In the sense that, is it possible that we overlook the term of what it really means? Because a lot of people have attached a very negative stigma to it. But is ICO really essentially just a means of raising money? And could, if it was regulated, be actually something of value as a TGE?
By TGE, what is that referring to?
As in a token generation event.
Token generation event, right? Yeah, sorry. Here's the thing. I have a rooted belief, and it's a very bad dilemma. I have a rooted belief that in many of these protocols, or these outside of really the protocols that where dApps would be built on top of, a lot of the tokens that are generated are practically going to be worthless, and they actually will usually always be worthless unless there can be serious utility behind it, like computational resources, things of that sort in that case, unless we're talking about currencies, which can become mechanisms of storing wealth.
Right. That's a good point.
And it leaves a bad dilemma, because here's the thing. I believe there's this whole new hype wave around STOs. And we could, for example, have what was originally an ICO previously beforehand now be the same exact thing, same concept, but you have ownership of that platform, or you have equity in some kind of body of some sort. The problem that I see is that it's the same issues that stop people from investing in ICOs in the United States. When you're dealing with securities, average everyday people can't invest in this stuff, right? They can't invest in these projects. And it completely kills this whole idea of being able to build these digital ecosystems, these global, global communities without borders that all share a same philosophical concept or same vision for some kind of world that has a brand new way of looking at, communication, technology with distributed ledger technology. I think it's very upsetting that the regulation is going to be setting this back. But at the same time, we need to build a more valuable model.
I couldn't agree more. And I just want to touch on that point. That's why I've interjected, is it your opinion that with the STO craze that is likely to come, that it will also demand accredited investors, to be part of that? Do you think that they may relax that so that it can be more of that interactive and open system where people essentially can fractionalize digital assets in a way that it was designed to before?
It's dependent on the regulators. Outside of, I guess, the United States, you might get varying laws, but the SEC does hold pretty good, decent jurisdiction over the world, as other regulators do follow what they say. I would say it's probably not going to change in the US anytime soon. There are some really cool companies. There's a company like known as Republic.co that does, they have found a way where you can invest in early stage startups, which originally retail investors could not do. So
Right.
that's a great first step. I've been begging for US regulators to do this for 5 years, because I believe if some angel investor can invest, $100,000 across 10 different startups, 10,000 in each one, and hope that they're going to catch the next Facebook, I think an average American should be able to do that. I think an average citizen should be able to do that.
And also,
And
Nick, I mean, that's what we're standing for. And you and I are here about trying to enfranchise this potential, this technology to really reach as many people, to enable them to change the game for their own social mobility, to allow them to have better socioeconomic means. And that's the whole point of what this should be doing, not reinforcing the hierarchy and the powers that be. But let's hark back again to the legalities and also the STO. Is it possible, Nick, that you might be wrong, and that the other parts of the world are actually leading the way with legal legislation that enacts, the potential for an STO? And could it be that the US is just simply left behind?
oh, no. I have no disagreement with that. If the SEC doesn't pick up their attitude and start looking at a more neutral stance on this, and I'm someone, for example, I tell people to not be too hard on the SEC. They've been quite positive in the crypto space because they've been focusing on really dishing out the clear ICO scams, whereas they've allowed a lot of other things still to continue to operate. That being realized, though, if they do not pick up their act soon and start supporting a much better ICO model, the ICO is not going away. And you're going to have much more scams until we finally build an actual model that allows people to have equity in something, to have real ownership and real rights over something. I think that speaks not only to what I would have hoped for in the world, but what many countries are doing right now. And that's why I think so many of these ICOs you mentioned, we've been talking about BitTorrent and stuff, all these ICOs or token sales are still going on.
Yes.
Because that securities framework is coming around, and they're in jurisdictions where they feel much more comfortable outside of really the SEC's direct reach.
Exactly, Nick. And you traveled far more than me in the whole crypto scene. You've been to Malta, you've been to a multitude of different countries around the world through your representation and leadership in the social sort of sphere. But Nick, obviously you'd be privy as well to some of the complexities of the legislation itself. For example, one of the issues that's very contentious right now is that there is a potential for startups to move or migrate from the SEC's determination across the CFTCs. And Ethereum is a great example of that. In the initial phase, there was no question that it had a security-like structure. As an investment, you could put your money in with the hope through the Howey test, blah, blah, blah. But now the argument suggests through the CFTC that it is somewhat of that commodity. Do you think that's a bit of an opaque, approach, given that it would afford some sort of grace for those that now function as either a utility or hoping to be that have already had massive raises, and to the detriment of those who are desperately trying, that may have good tech and just simply can't get the injections of cash that the ICO bubble afforded?
Yeah, so I'd say that there are a few tokens that are clear utility tokens. Whether or not the utility model will last in many of these ICOs, or if they really do provide real utility, that's up in the air. But the few ICOs that I have supported or been eager to support, I know, for example, I was an advisor for Unibright, and then along with that as well, early Substratum supporter in this case, both of those utility tokens. And I liked it because they actually had a value proposition in this case as utility token, whereas I saw a lot of utility tokens in kind of failed models. There wasn't enough demand, I thought, for that token.
And Nick, you raised a really good point there, and we're going to talk more about projects of interest. I do want to find out more about your thinking. And I do agree with you entirely about Unibright, for example, because clearly they have a model that's an enterprise focused, but they also want to make sure that that utility has value. But here's the thing I was wondering, Nick, and I was hoping you might be able to explain to the listeners, is how do we ensure there's a correlation between that token, just whether, if in fact it does have utility and the company produce revenue, how do we ensure that has correlations with the business growth, with the revenue and the success of the business that builds out?
Yeah. So you need to have the utility token directly tied, the value of that token directly tied as much as you can with actual real adoption of your technology. That is, again, what you're raising for in this case. The token is a metric of output of a given system. So for example,
So Nick, is
this
that
would
a
be,
currency in that context though? Is it a utility currency then?
uh, well, yeah, I would say, I mean, we can swap between tokens and currency in this case as terms, but I would say more than anything, like, yes, you could say it's a token or a currency. That basically it's an IOU basically to a distributed system where you can get access to a certain amount of computational power. For example, storage space in the case of things like Sia coin, for example. These tokens or cryptocurrencies, they have some type of value of output from these distributed or decentralized systems. And if your distributed decentralized system, that's a tongue twister. If you have that, but you don't have any real utility on top of it, sadly, like 99% of blockchain projects
going to die.
Your utility token doesn't speak anything. I mean, people can speculate on it, but that
Nick,
doesn't really.
I've looked into Unibright specifically. Obviously, you'd raised the issue, and that's why I started looking to Unibright over a year ago, having spoken to the team twice now. But what interests me is not so much their potential for business and enterprise. That's pretty clear that that's already happening right now. But once again, how do we ensure that token, because firstly, these tokens in all of these economies were raised as securities, whether they like it or not, they were. And so they using that to try and build their business out. They had to do it that way, even the legitimate companies, so that they could then have some sort of prospect, build their team out, use the capital. Many of them cashed out to fiat so they could do it. But at what point can we prove for sure, or can they, that particular token that people in the retail market have invested in can convert into a correlation of value? And that's important to us, because it's one thing to have revenue and to build out a business and Unibright be successful. But how can that retail investor capitalize on that particular token because of the success or the prospective success of that company?
Yeah. Well, I liked Unibright's model as an example. I don't mean to show the project too much, but I think it's a good model in the sense of utility token, where, as I defined earlier, in the sense of utility token being an output from the distributed system or the technology that you're building. In Unibright, the big thing that they're building, for those who don't know about Unibright specifically, Unibright's basically a software platform where you can deploy smart contracts on a variety of blockchains. You don't need to have any coding experience. They have a great block explorer where you can actually watch the smart contract in action.
Yeah,
lots of really cool technology.
It's a one-stop shop, basically.
It's a one-stop shop. That's a great way of putting it. And the cool thing I liked about it is it knocks down a lot of barriers to smart contract adoption, which is what so many corporations want to utilize. They want to utilize Ethereum or Neo and all these smart contract platforms to do real-world applications. But the thing is that on Unibright, the major thing you're doing is deploying smart contracts. Once you've designed it, you deploy a smart contract on whatever protocol they have available that you've chosen. The thing is, though, that in order to deploy that contract onto that exchange, to do all that automated process, to develop it, you have to use the Unibright token to actually deploy that contract. Yes. So the more adoption of the platform in this case, the more you're able to have demand for the token. So they just got, I might be pronouncing the name wrong, Deutsche Bahn, which is the huge train company that we actually just saw as a corporate partner for Unibright. If that company consistently on a weekly basis needs to deploy 50,000 smart contracts, they're continuously setting a demand for that token. So it's almost like a voucher system in a sense.
Yeah, it is. It's exactly what it is. It's a redeemable voucher system that is fun. Technically, it's an internal economy. That's how I see it, Nick. But the thing is, I just wanted to jump in because I totally agree. I mean, I'm a big fan of something like CHX. I speak about it a lot. I tweet about it a lot. I like the quant network for what they're doing. And I'm not an ambassador or, it's not a shill. I did invest in both of them on the secondary market. But the thing is that even in that context, though, when we're talking about the requisites of trade, that these enterprises have to go and engage with this token. It's compulsory for that enterprise, for that business to transact between A to B. But Nick, the question I have now is, how is that going to happen when we have tens of thousands of different microeconomies with their own tokenized systems? Is that going to be practical? Is that going to be something that's viable long term? Is it going to frustrate enterprise?
I don't think it's going to be very commonplace. That's why I don't believe there'll be too many utility platforms. It might be something that's quite short-lived. But I think for the case of something that's similar to the Unibright model we discussed, what's really nice is you can actually do it B2B. So if Unibright, for example, knows how to deal with the token in this case versus this company that they're partnering with, and they're like, we don't want to deal with the token. We just simply want to execute X amount of smart contracts at a fixed price. they can go through and negotiate that deal. So that's what we want to see, is that companies will offer, hey, look, don't worry, you just like the technology, we can streamline that. We'll basically conduct everything for you.
Yes, that's what I'm hearing also. Many of them can just
Yeah.
conduct the transaction in fiat, which is
precisely. Yeah.
quite seamless. It's an interesting model. Certainly they're the ones that I'm looking more at as well, because fundamentally, for everything in the utility domain to work, there must be that correlation. That must be that proof. Otherwise, WTF, pretty much. What the hell are we investing in as utilities or as prospective utilities if in fact there is no correlation with the growth and success of the company? It then just becomes a nothing, a nothing token. And as you said, Nick, as well, for the most part, some of these technologies just may not evolve into the utility and real world domain and be actualized through mass adoption. I think
the
that's
vast majority. The vast majority of ICOs were completely propped up off speculation. And speculation it's a real thing. I mean, you got Beanie Babies, you got Crypto Kitties. If you want to have it down that market, you can. But it's like, I'd much rather see some real utility be built in this space. And I'm glad you're focused on that, Brad. You're focused on
very much. But Nick, how do we cope with that though, bro? Like, given that the exchanges, and I do want to talk to you about them in a moment, but how do we cope with the issue of speculation? Unibright's doing something quite interesting in that they're also monitoring heavily the separation of the speculator to the enterprise party. And they have a way in which they can ensure that who is the participant in both sides of, the interest of the coin. So, is that something that all companies need to be aware of? Because clearly speculation can affect and disaffect value.
Yeah, it can. But I'd say it's a complicated question. So for these ICOs, you need to build models where value can be much more predictable with the rate of adoption. And again, as I mentioned, I think that's as you do business deals, for example, where they swap out a certain amount of tokens for a certain amount of utility on your platform. I think that's a good way to do it because they can set a market price for it. And once you have someone, for example, rather than a few small people buying 500 coins here, 500 coins there, you can have a real finite example that this token is being used, this platform is being demanded. Right. And it's much more predictable, and it brings much more liquidity when you get real partnerships like that.
Okay.
And that kind of gets you out of that wave of speculation because you can see what a company is willing to pay for that utility of executing a smart contract. But again, it's something, to me, it's an imperfect model, this whole idea of utility tokens. And I think that what has a much easier time of finding value is peer-to-peer digital currencies more than anything.
Yes, and we're going to talk about them. I know you're very passionate about that very fundamental point of value, and that is that transactability, that not so much necessarily traceability. I know you're a proponent of having degrees of privacy, but most importantly, it's removing that middleman, having no intermediaries between us as we transact for more empowerment. But Nick, let's talk about the complicated narrative of centralization versus decentralization. A lot of bullshit is thrown around between those terms. A good example is exchanges themselves, in the sense that some are quasi-centralized, but yet, they claim that they are decentralized and that they're DEXs. What are your thoughts on all this narrative? Yeah.
So I have, there's really two topics here. There's centralized and decentralized. For centralized exchanges, I'm not as negative as most people are. I think a lot of people kind of come from I come from the same camp. Like I was a hardcore libertarian going into crypto and stuff, where everyone was really passionate about the idea of becoming your own bank, right? And I absolutely agree. If crypto does not allow you that opportunity to manage your own funds, it's worthless in that case. But most people in the world don't want to manage their own funds, and a lot of people don't want to manage it on a decentralized system. So I can see the value for centralized exchanges, and not to mention streamlining a variety of services like trading and so many other more that I hope to see on exchanges in the future. For decentralized exchanges, though, I think it's a very noble cause because they really do change the game, much like how crypto, if we can reach a fully functional, scalable, decentralized exchange, it will change the game like crypto in the sense of the immutability and the censorship resistance and the almost Pandora's box that opens in being able to swap value across the world and potentially even privately. That's going to shake things up a lot.
Yeah, well, let's talk about that, Nick, that value of privacy. Why should that be injected into the blockchain? Because this is important given all your knowledge of BTC. It doesn't afford that necessarily. Arguably, it potentially is too transparent. So, what's your view on that? in relation to the imperative of decentralized exchange, globally.
Right. Yeah. So, well, for decentralized exchanges and both for just cryptocurrency itself and sending transactions, the reason privacy is important as well as fungibility, they kind of go hand in hand in a sense. One Bitcoin should be equal to one Bitcoin, but with the traceability of it, it sometimes isn't as equal in this case because there's not as much privacy. So,
Right.
getting back to this fundamental point of privacy, why does it matter? Well, it matters for everyone pretty much. It matters. So, for example, if I know your address or someone else's address from doing a one-time transaction, then I don't see your entire transaction history. It's important for businesses so that when I spend Bitcoin and send it to their address, in this case, that I'm not going to see all of the other quarterly transactions that they've done. So I know how to predict, how much sales they've done this quarter. That's private information under federal law with publicly traded companies.
And I think you raise a great point, Nick, because, I don't necessarily want to open my wallet and show you, even though we're friends, but it doesn't mean I can't interact in a decentralized manner entirely between, us when we want to do business, for example, or we want to just send money because, your card might be broken down and I don't want to have to pay Western Union. You know what I mean?
Exactly. No, I mean, that's the thing. And I think people jump the gun, for example, when you hear privacy and you're like, oh, that's you're building all these straw man arguments or these weak arguments to support like criminal trades and, buying drugs and stuff. And look, to be fair, again, coming from my libertarian view, that's not my business to tell people what they can and can't buy. And I'm someone, for example, who's feels quite passionate about Ross, for example.
Likewise, I also agree entirely. And I support what you're saying.
Yeah, I mean, but even putting that aside, those markets not only always exist, but they're massively cash based. They don't use cryptocurrencies, and I think it's the possibility of any potential digital trace until we have full private digital currency. Then in the future, possibly.
Nick, is it possible though that we were both, and many other parties listening, were seduced by that libertarian and maximalist narrative? Because it was really sexy for all the millennials. It was really interesting and it was engaging. But were we missing the mark with the imperative of privacy, perhaps?
Yeah, I think a lot of people still think Bitcoin's private. That's a big issue with I met so many people and they're like, okay, I can get how Bitcoin's valuable because it's private. I'm like, no, it's not. No. Don't lead to that misconception, because the moment you buy Bitcoin on an exchange, unless you are mining new Bitcoin and you have generated a new block with a block reward that is sent to a address that you have committed to the pool, there is no way in this case that you can have real full guaranteed privacy on Bitcoin. And that's of course it's not essential maybe right now when there's less than 1% of global adoption. That's an issue for this to become real peer-to-peer digital cash. Bitcoin and Bitcoin Cash and Litecoin and all these major cryptocurrencies haven't yet fully met that. Somehow, like Monero, Dash has started to mix in some privacy features as well. But again, you've got a range of currencies that are attempting it, but I think it should be an essential technology for peer-to-peer digital currencies.
I actually agree. And it's a huge risk for us to both be saying that, but I do. And what are your thoughts on the developments? We've seen the branding of MimbleWimble, the protocol. Then we've seen new, projects come on board with Grin and Beam. I'm not plugging them, but it is interesting because the branding is imperative. BTC has arguably the best brand. It's highly probabilistic. Proof of work has literally been proven. But once again, Nick, is there a possibility that we can move beyond in branding for a light currency that has provide privacy features, and more importantly, Nick, can cater for enterprise needs? Because right now, BTC cannot cut that, cannot do it, and is certainly not capturing the interests of the enterprise sector, and nor perhaps should it.
Yeah, I think that there's a chance for a variety of currencies to live. As I mentioned, I think it's going to be similar to the traditional world we live in, where we have dozens of currencies, but rather than being based on nationality and a government forcing you to spend that currency or for a business to accept that currency in that given country, we're going to have a mixture of different protocols with different currencies that resemble different motives, different forms of technology, a variety of different frameworks. And with that, I think as I mentioned, I think there's going to be some that are much more privacy focused. Now, in the sense of MimbleWimble and Grin and Beam, I'm very interested in this technology because for the first time, we have something that is extremely lightweight and is fungible and private, right?
Yes.
And it's a very interesting way. I don't think we have enough time on the.
No, we don't. But it is. I agree with you. Yeah.
But yeah, that Mimble, of course, we wouldn't have enough time to explain it all. But I did a video on my channel talking about MimbleWimble and stuff, and I don't even think I did it justice. But long story short, it's a very interesting technology that brings some properties to cryptocurrencies that really make it peer-to-peer digital cash and completely untraceable. So I think I can understand the speculative wave that has come with it and the potential for it to be one of the next big altcoins with a front runner advantage to MimbleWimble. And if Bitcoin and some of the major cryptocurrencies don't adopt it, absolutely, I think it'll be probably a top 10 or 20 coin later down.
I tend to agree. And also right now, as we speak, there's a serious inflation issue that's being sort of discussed through all the different social channels of crypto right now with Green. So in that respect, I mean, there's a lot of technological development. I think that's the other thing too, as well, Nick, that people overlook, is that right from the outset, BTC wasn't set in stone. We all know that from the evolution of its narrative. And likewise, no technology should be stifled by its beginning. And so in that respect, I am a proponent not of necessarily one particular coin or cryptocurrency, but more the fact that they can embed it for use case. That's what I'm looking for, is that can any of these currencies actually facilitate with the needs of people to have privacy, and also then, very importantly, not to overlook the value of enterprise. So yeah, I mean, I've rambled there, but I think they're two important things. Now, with regard to top projects, Nick, I want to rack your brain. We discussed Unibright. I'm going to give you some names, so don't put pressure on you, to just think off the cuff. Algorand, Bloxroute, Chainspace, Top Network, Trias, BlockCloud, Nia. We've talked before about these kinds of projects. We call them top tier. Is this a fallacy? Is there such thing as top tier, and why?
I think a lot of the projects you named, predominantly ones like Algorand, not to be too direct or mean or anything like that, I think a lot of these projects way overraised. Not to mention as well, I have yet to see, some of them I don't know, some of the ones that you mentioned, to be completely fair, as I've been kind of void of the ICO space. But I'd say more than anything, we're still hitting the saturation of way too many protocols and not enough substance in the sense of what they're offering. I think that's the biggest issue right now. We need to have something that comes out of the bat that isn't an ICO, like the old projects that were built in the cryptocurrency space, that actually can provide very dramatic new technologies, similar to what Grin's done, for example. It's been community crowdfunded and then supported. And that's where—
And no pre-mine. That's really important to add as well.
No pre-mine. Huge benefit to Grin. I know, for example, Beam has some people disputing over Beam in regards to the founder's reward, very similar to I think it's not Zcash. I think more than anything, I'm very interested in seeing projects that don't go down that route of the ICO model. It's fascinating when you can see something built out like that. But what you mentioned, a lot of the projects you mentioned were scalable protocols for enterprise adoption and enterprise applications.
Those platform, those are competing in the platform space for the race to the top, essentially.
Yeah, and I think there's a market for that, but I'm more than anything, the only way I can feel confident in all these platforms, it doesn't matter how scalable they are, how much added features they add. What I'm curious about is when we're going to see a really good, solid killer application, a DApp in this case, a decentralized application.
And Nick, what's required? Is it top down or is it grassroots up? In the sense that, from what I'm seeing, all the CEOs I talk to, it's the former. It's the enterprise sectors that are driving part of this potential for mass adoption, because real businesses in our world today are taking on some of these projects and trying to use them in their contexts that are not necessarily blockchain. So it's that interconnection potential between the blockchain startup and the non-blockchain business interest that may, in fact, lead out to us all using it.
Yeah, it really depends on what companies. I think companies are still barely just getting the grasps of it. I think some Fortune 500 companies, predominantly IBM and a lot of others in the same tech fields, have started to finally explore it. But I think as we get more and more companies, some more small and medium-sized, exploring with blockchain, we will start to see some opt out of just private blockchains, and we'll start seeing them use public blockchains. Again, though, it's a matter of providing easy onboarding tools. I can tell you one thing that sets it back, and again, another reason why I was a big fan of Unibright, is that you should not have to hire a Solidity developer to be able to build on Ethereum or any of these protocols. You shouldn't have to hire someone to specifically build on a platform that's going to cost you anywhere around $150,000 to $250,000.
Yes, right? Because time is money. I heard a quote recently, you need a few months at the very bare minimum to really unpack Solidity. But there's also the argument, Nick, that just because, you know, you have Ethereum, for example, using Solidity doesn't mean that it can't also utilize the benefits of other programming languages. Because my understanding is that eventually they will onboard that potential. So it's important that people understand that, I think, of some of these single developing language-based projects. Are you there,
Yeah,
Nick?
exactly. Yeah, sorry, it cut out there for a slight second. But no, you're right. As they start to add language flexibility, I mean, that was a big reason why people really liked Neo and a few other protocols when they were like, oh, I can actually use C# and I can use a variety of different languages. People got excited. But I think, as you mentioned, for example, there is works right now where, you know, basically in the virtual machines, they can compile into different languages. And I think the more the merrier in that case. The more flexibility you provide, it brings in more developers, it cuts down the barrier to entry, and it actually makes blockchain much more applicable for businesses to actually start building things with it. Because when you can take your dev team and you get them through, say, a little bit of research and understanding of blockchain, maybe blockchain certification or something of that sort, then you can just push them in and they can actually start working on some things that are blockchain.
I think you raise a really good point in that respect as well, because often we discuss too much, especially last year on that trilemma issue, with scalability being at the forefront of the discussion, when in fact the requisites for the first big phase of all of these projects, it just doesn't need that much scalability. It just doesn't. And so as long as they meet the needs of the market at that point, then certainly the functionality and the presentation of the possibility will be there. But that's when the question comes to the fore about mechanisms as well, Nick. You mentioned lean, and I often use the word green in the sense that BTC is neither, you know, with respect to, you know, the new iterations that are coming forth now. So what is your take on the imperatives also having to respect the fact that there is a huge amount of energy consumption and energy wastage with some of these first iterations?
Yeah, so I mean, well, there's a lot of things that are, to the point you were kind of driving home earlier, there's a lot of things that are holding back cryptocurrencies in general. I think, again, as we were talking about, it's probably ease of use more than anything, or ease to onboarding for more of the enterprise applications. But on the topic of, you know, Bitcoin's power consumption, I do worry about it. As much as I know people, for example, make arguments that there's renewable energy being used and people chase the cheapest energy source. In many cases, again, that goes back to being renewable. The thing that I keep coming to more than anything is that, you know, we cannot have multiple proof of work blockchains. If we want to have one, I think that's fine, but I just think it's silly to have a variety of proof of work blockchains that are exponentially growing their power consumption. And, you know, you've got, for example, Monero and Dash that do the same thing. They operate on proof of work. And it seems so silly to have not only distributed different proof of work networks rather than having it all in one that's highly secure. But along with that, it is kind of wasteful. It has wasted a lot of electricity.
And Nick, you know, in that respect, you know, you talk about the high wastage, and we've talked about developing countries, and then we couple that together and we see developing countries having huge mining farms because their electricity is cheap. Another really unusual sort of paradigm emerging, or paradox perhaps, because, you know, a lot of the benefits of those mining farms go out from those countries financially, and yet they offer.
I would say more than anything, the issue that I have is that we have yet to see the Bitcoin network output the value to match with its power consumption. Yes, maybe Bitcoin has had some massive transfers of wealth. You can see, like, you can make a $100 million Bitcoin transaction for 2 cents. You know, sometimes the fees are low enough. But the issue that I see is that if you're still at this point where we're processing 3 to 5 transactions a second, and we're still waiting on Lightning Network, and we're still waiting.
Nick. It's been a decade.
Yeah. I think we need something that's a little bit more, you know, fitting to the times right now. And later down the road, if we can improve that, then that's good. But I just, more than anything, I think we're going to come to a consensus mechanism that will outpace proof of work. It was a great first step, though, nonetheless. But it's still.
I totally agree, and I think it's quite bizarre that we're having this discussion, because we're both proponents of BTC and want to make that clear in terms of its ideology and its applicability. But Nick, in that respect, clearly you have, you know, tweeted out a few things. You have an idea in mind. What's your plan? Now, with your passion with peer-to-peer, are you planning on doing something yourself?
Yeah, I'm working on a few projects right now. The predominant one is Project Genesis, and I can't discuss too much on it personally, but nonetheless, it is something that I've had in my mind for about 3 years now. It focuses on a lot of issues that not only that are still apparent in the traditional financial system, but I also focus in on a lot of issues that I still see in the cryptocurrency space because, as I mentioned, we're still at 1% adoption right now. There's still a lot of issues that are keeping us from reaching, 50, 60, 70% of the world over the next decade or two. And
Right.
I think we'll hit that S curve eventually, like the internet. But we really need to start thinking about what's getting in the way from real, actual use case in regards to a cryptocurrency as
Well, I'm
money.
looking forward to
But
hearing about more of this, Genesis, because it sounds like a lot of flowery talk when I just want to know what it is about. So you can't tell us.
I can't mention it right now. A lot of it's top secret. No, I'm just kidding. But it's something, again, as I mentioned, that I've had in my mind for a long time, and it seems as if we've got a team right now of contributors, about 12 to 15 really active participants, and it's been really great in that sense. We've been actually able to start bringing these things to life.
Well, Nick, thank you for also being transparent. One of the issues, and I want to move to this now, is there is a lack of there's a lack of transparency for the most part in a lot of the influencer space, in the VC space, in the exchange space. I mean, in every domain, I suppose, even in normal business, there's always issues of sort of opaque and questionable practices at best, and then at worst, simply illegal. So I'm going to throw some terms, and I would love to know what you think. We conflate things like shitfluencer, effluencer. They actually coined that on Twitter. Shit coins. Discussions about alliances. What do you say to the real stuff that is happening, where there's collusion, and that there's things going on that are certainly thwarting the legitimacy of the whole space?
So I've talked about this at a conference, I think one of the first or two that I ever attended. And as a YouTuber, this is something I noticed very quickly. There are going to be waves of, I hate to use the term myself, influencers. There are going to be waves of individuals and personalities in this space. You've already had many of them that have come and they have gone.
Right.
The first wave was the BitConnect crowd. BitConnect YouTubers made up some of the largest ones. You had Crypto Nick, who actually for a good amount of time completely, even as I was growing to be the largest channel, he actually surpassed me for a little while in January. He's no longer.
The promise of money will do that.
Yeah, right. Exactly. It drives a lot of people to greed. You had the same with Tron James and a lot of other people who went down that rabbit hole. Some of them may be around, but most of them are gone, and they've stopped talking about BitConnect. They're not respecting the crypto space. And then you have, I really can't name any specific names, but you've had more of the shill types who promoted ICOs and 50x, 100x, just very like in your face, like next big thing.
Oh, you mean like Bellina? You mean like Ian Bellina? Did you say
I don't know.
Bellina? I did.
Yes. Well, I mean, the thing is, I definitely, I'm not here to build any nasty ties, but at the same time, that's not my type in the space.
It's fine, Nick. I named him. You didn't. It's fine. But I hear what you're saying is that there is serious problems with the way in which the ICO bubble was also led out by people who weren't really necessarily that transparent, because one of the issues with people like Ian Bellina is that he does have a fund. Manran or the CNBC guy, they have funds. And so I did want to ask you about that. I'm not suggesting that they can't be professional, but doesn't it also create a conflict of interest when they are on one hand an influencer, on the other hand they're a fund manager and they run that fund?
Yeah, I mean, you can definitely invest in things that you support, but if you're not transparent about it, and you really just go about trying to sell the investment opportunity rather than saying, look, I actually like this because it's doing X or Y, that's where it gets a little bit fishy for me.
Right. So transparency. So in their respect, as long as they're disclosing on their websites, which I believe that they do, and that is important that I mentioned. But at the same time, there is a role, I'd imagine, a responsibility, not just to be transparent, at the very primitive sort of level or at the very most simplistic sense. So it's ticking the box, but really be transparent, really let the people know.
I've got a great analogy because this is a good thing. It's something I've thought about a lot being a YouTuber in the space. It's something that I've known about kind of from the start, and it's something I like to call I like to equate it to traditional markets. So I'll give you a good example of what my point's basically based around. If you look at traditional markets, there's a lot of different things that can push markets up or down. If someone makes a simple comment, it can change things. In fact, a good thing that a lot of people notice is like when Warren Buffett makes a comment, for example, that he thinks equities are going to pull back for the year or that it's a good time to buy. He can literally say something as simple as that, and you'll see entire multi-trillion-dollar equity markets go up.
Well, actually, we saw that with the joint, or that's what we call them in Australia, when we saw was it Elon Musk smoke a joint on live, and it affected the whole market, and then he was in a lot of trouble for it.
Yeah, I mean, there's all kinds of spontaneous things that it can move markets in the simplest way, and that's the crazy thing about markets in that case, which is fun and sometimes also startling. But in the case of
Nick, it's almost the Oprah effect.
The Oprah effect, yes. That's that's another great way to label in that case. I'm assuming that would probably be more of an official title of what I'm discussing. Basically, just the simple remarks that people can make can move markets. Now, people would usually say, oh, that's market manipulation. But they wouldn't say it in Warren Buffett's case. They just say, oh, no, well, the markets move like that.
I think that's such a valid point, because what gives him the right to speak publicly about something and not you?
That's the thing. And there's a reason why people don't criticize Warren Buffett. It's because they know he's a trusted source. He has been a long-term investor. He's one of the richest people in the world.
But because of that. But is he? How can we really say that? You know what I mean, though? Subjectively, how can we know that he's not aware of his power? I'm not suggesting he is, but do you understand how we can be sheep?
I have no doubt. I have no doubt that he's aware of the power he has, and I can tell you, I've with most billionaires, even who appear very nice on TV, I've heard people who talk about them being very cynical and business minded. But I'd say this: the important thing to take away is that if Warren Buffett speaks wrong on too many occasions, if he makes too many wrong calls, and this is the importance of keeping high people in power accountable that have an influence over others and opinions. If he continues to make too many wrong calls, people stop believing in it. If you make too many big bets, people stop believing in you.
Or perhaps bets that are baseless as well.
Precisely.
And here's an interesting point as well, Nick. It's one thing to be talking about Warren Buffett, who came from nothing and built his empire based on diligence and research. I mean, the guy didn't just get it he wasn't a Trump scenario where daddy helped him in the beginning. So let's go back again to this discussion of many of these so-called shitfluencers. There is a big difference between those who speak in those terms and those who are trying to be content creators. That's a different category. And those that are trying to be educators in this space, because many of them just simply don't know what they're talking about. And sometimes they'll align themselves out of their own financial interests to then go and shell shit. Literally, that's when a shit coin to me becomes an issue, because another complexity is payment. There is absolutely nothing wrong in my mind with being sponsored if that's what they so choose. But if they do it, collectively with a coin that they don't understand, that's a problem. Because as you know, Nick, and I'm sure you get a lot of emails, the biggest offers for deals in which many, even now, I'll assume they take, are the ones that are the most concerning, the ones that arguably have the worst, technological premise, because they're so desperate for influence.
Yeah. I mean, I'd say more than anything, Brad, because you brought up a few different points here. People who have bad intentions, deals gone wrong, and influence in regards to financial offers, I guess, in this sense. But the major thing I'd say is that, again, it goes back to this point. It's a sad reality, but that you're going to have to wait over time to let these people filter themselves out. And they may make money. Many people in the BitConnect team still made money. A lot of the ICO pumpers, they made money. But there's a filtering that goes on over time, because even though things have slowed down in the crypto space, interestingly enough, look at the names that are around right now. They're good people that I know, like you, Brad. They're people who I've met, for example, like Box Mining, for example.
Yes.
Just a lot of different YouTubers who have a really good sense of quality, like Crypto Daily.
I'm really looking for them as well. To be honest with you, I'll give a plug to two. One is Crypto Guru. One I know him as Tom. Alex Libertas. He's doing something really, really interesting, because he's trying to align the interests of many different content creators that are, tech focused and educationally focused for a platform. So there is some really cool things happening. But Nick, what is your thought on crypto pop? Because that exists right now.
Yeah. So like you mean like pop? You mean like the pop culture around crypto?
As in populism, as in really just making it fun and relevant, but maybe they don't really know what they're talking about.
Yeah. Well, I mean, there's two ways you could really view the term crypto populism. And I would say more than anything, sometimes people get very protective over their specific crypto. And that's just an issue because there's financial incentives in regards to these projects. But the other thing as well, in the sense of like keeping it interesting, I think a lot of these people, they're trying to please speculators. Like in that case, like what they should be doing is, the people are investing in these things. If you're in the Western world, you're investing in cryptocurrency because you want the value to go up over time, right? Well, the best thing to do is to get merchant adoption, to get real people using and accepting it and building real commercial demand that's going to happen on a day-to-day basis rather than a short-term hype wave that's going to pump up price in a short period of time and then dump it.
I think that's one of the most important things I think we could have discussed in this whole interview, Nick, because that means that, there should be less focus on that pay-to-play model where they get money for a quick video or a quick article, and move more across to the ambassadorships. And that's what I did want to talk to you about, because clearly you've done ambassadorships, with Substratum and now with Unibright. They're relevant.
I didn't do one with Substratum, but I did one with Unibright. Yeah.
Oh, my apologies. So you've done an official one with Unibright, and you've never shied away from being open about that in every context. Should that be the model that we progress to? I mean, I will say that that's the model I'd like to do for myself. I'm not going to shy away from it, and nor should I think, because for me personally, I'm not monetizing. And that's a really difficult thing to do. But I also think that for anyone to be educationalists or speakers in this space, we have to get real and find ways to represent and honor the retail investor, but do it in a way that doesn't shit on them. It doesn't mean that I can go and take fiat, I can go and take Ethereum, have a chat with someone, and then not give a shit. That does happen a lot.
Yeah. Again, going back to this point where there are a lot of people who are still doing that in this space who do not think of the end users that they're representing in a sense. There are legal repercussions in that case for openly promoting things and then not stating it in that case.
Well, let's say even though they do discuss it, they do disclose. Often they do. They'll say that there's sponsored content, but is it enough? Is it enough to, sponsor something they don't understand for Ethereum and fiat and BTC?
Well, if they don't understand it, absolutely. But I mean, it's the one thing that's a problem is that you have to, how do you gauge that? And I think the ultimate decider is whether or not that project ends up actually producing anything. And it's sad in financial markets. I mean, if we all had a magical wand we could wave that said this project is actually really good and we could prove it some way, then we wouldn't have to deal with any people getting burnt on ICOs and we'd all just be millionaires. But
it's a really good point, Nick. But here's another big challenge in that context is the alliances. Because, let's couple it together a little bit. If you've got a sponsored video from somebody, no problem. If they're disclosing, fine. But what if there's an agent behind them, Nick? And that agent gives them the information, explains to them what the project's about, and gives them basically a cheat sheet that they then just regurgitate. What happens if that agent does that with a multitude of different parties and they all shill the same shitcoin and then people buy it and then they get the fiat, not the... Do you know what I mean?
Yeah, I see. I mean, I don't really know of much of that going on too much right now, but I would say that it happens. Yeah. I mean, I'd say like if that's the case, then it is a problem in that case, if people can't honestly speak for themselves. And then again, I think more than anything, people start to catch on if people aren't speaking for themselves. So again, it's the filtering process where basically if you start to detect that too many people are saying the same thing and they aren't offering a unique value proposition. For example, you do longer format content. I do something that's probably more mid format content. We actually dive through the white paper. We give our own opinions. We provide pros and cons. You don't see us shilling, for example, BitTorrent to no avail.
No. And I think also, Nick, you've also started your podcast, the Dash Cast. Is that how it's called? Or, and that also affords an opportunity for those in the executive teams to, I guess, explicate what they're about. To really provide information that we simply couldn't offer because you can only get so much from the content that we can access. But if we ask the right questions and we go deep, that is the best gift to all of us, I think, because it allows us to have the best information out there, and that's from them.
I'd say that's one thing I like about your content, Brad, is the massive amount of interviews that you have directly with the CEO, because there's nothing better than when you are discussing to a CEO and they can't answer a question, because that lets you think two things. Well, I mean, it doesn't always mean, it's not always a gotcha moment. It's a matter of saying like, look, maybe you guys haven't thought through everything.
Yes, I've actually had that a few times, Nick. I'm sure you have. And I'm just astounded sometimes. And I think I need to go even more in that objective approach, because we need it. We need it as much as possible for educational advocates to get into the mix and really push for the truth as much as possible, if it even exists, Nick, because you can't control what people are going to say, obviously, but taking that very 60 minutes approach, I think, really matters. And that's also what I wanted to ask you about with regard to the VCs. You and I both privileged to know many different investor partners, those that have capital interests in projects. We know that there's problems with pump and dumps all the way to the very top. So in that respect, are we also at risk of some of the collusion happening at that level? And could that also be stifling the whole ecosystem that is crypto?
Oh, yeah, I mean, I'll be honest, I'm not in a position where I can name names, but I can tell you the vast majority of VCs, to simplify it for those watching. I don't have too many connections to VCs. Brad, you're the good connector. You know everyone in the space. But I will say that the summary from what I understand, and for the past year of learning how the ICO space worked, is that you had a variety, and I'd say dozens of funds pop up out of nowhere, predominantly in Asia and areas like Hong Kong, Singapore, and places where there's a little more freedom away from China. And a lot of these funds came up, and they were basically promoting all of these ICOs. They had direct connections to a lot of exchanges. Again, can't really name names because I don't know which funds were connected to. So it's bad business. It's basically where people were connecting to individuals at these exchanges, and they didn't care about the fundamentals in these exchanges, but boy, did they have volume. And what they did is they did pre-sales and then public sales.
Wash trading, market making.
Yeah, then they would list those on exchanges, and they could basically dump it on secondary markets to retail investors. That became very apparent, and that's why I came out back in the summer of 2018 when I started, the summer of 2018 when I started to learn about this. And I was like, guys, this is what's happening in the ICO space. I had no idea about it.
I didn't literally for a long time. I mean, Nick, sends you. I watched a Netflix video. That's how I learned about blockchain. And it was Charlie Shrem, ironically, who I'm hoping to speak to at some stage when he finally responds. But what is funny though is that many of the proponents for the technology, just even the teams themselves, weren't aware. I find that to be quite prevalent with the top tier projects that are there to build something, literally build for a purpose, is that they're not aware of some of the politics and some of the back end dealings, the collusions. I mean, it's getting better though, Nick. I can tell you that. There are certainly good VCs, I would say, and there are certainly very, very questionable ones. That are there to really line their pockets. And OTC really taught me that a lot. I'm now aware that for when there's a project that is at risk of entering the secondary market with low liquidity, they will just OTC that. Even those malactors. So it's something that we must not ever overlook, because it is cleaning up. And by default, through the demands of the top-down powers and regulatory pressure, I'm so excited to see that it's getting harder. And that's reflected, Nick, in the conferences. You go to conferences now, it's getting better.
Yeah, I'd say that when prices go down and the regulators come in, that's the time when the scammers get out. And I will say it's where I don't view the world in the black and white way, meaning I don't view things in a very simple, if this, then that view. Meaning, like, I think there's a necessary place for regulations, especially when you are dealing with securities that are things that are obviously securities. And as you were talking about in this whole case of VCs in the corruption space, there is. I mean, it's in every market, but it's especially in this market that's early on, when people were caught in a wave last year where they just wanted to make, really in 2017 predominantly, but they really just wanted to make money, and people were making dumb investments 24/7.
Well, Nick, you could make a dumb investment because everything went up.
Yeah. And it was just because there was consistent entry, like a Ponzi in a sense. There was consistent entry of liquidity into these ICOs. And it was the next big thing and the next big thing. And one thing that I wanted to mention as well, with this story, is what I was talking about, to provide a picture for some people, why there were so many ICOs in Asia, is that it was a conduit to basically launder money for a lot of people in China. So a big issue, thing, again, this is why I always try to study macro finance and get a big picture view. A lot of these VC funds were conduits, or basically they would do token sales. And a lot of these early stage investors were getting money out of China, and they were investing it into these and basically distributing the tokens, selling them on secondary markets like Binance, and being able to move the money out of China. And this has been going on. I mean, that's why China's banned cryptocurrency so early on. It wasn't that the ICOs were too speculative. They let speculation reign in China because it's a very cultural thing in China as it's become more westernized over the past few years.
And what's interesting in that context also, Nick, is that even some of the significant platforms, through their association with their own VC, perhaps, some of them are also really investing in applications that weren't designed for their own platform because they had better, financial potential short term. that was also very, surprising, because it came to be that the thing that was most paramount was that short-term gain. It didn't really seem to matter for some of the platforms who should be building their own platform. What became paramount, I'm saying, is that the potential for profit superseded building out their own ecosystem.
Something real. Yeah. I'd say as of so far, that's been proven to be the case, that the short-term hype was better for people to focus on. But I believe that there will be a few names that come through that really build what would be the next Bitcoin or the next Ethereum, and it will pay off too.
No hints from you yet on what they are?
Can
I FOMO in on DataDash's,
I'll get my crystal ball ready. No, I mean, I've done due diligence on a lot of projects, and I'm always keeping my eye open. But I think it's in really finding the value of what this space is going to bring to the world, because we need to stop thinking in the ideas of what's valuable to 1% of the world's population who have adopted crypto. What's going to be important for the other 99%? What commercial applications? If we're talking about peer-to-peer digital currency, actually people using these cryptocurrencies in everyday transactions, what matters to them? And it's not just thinking about at your neighborhood, where you live, where people might not really desire crypto, thinking about where less fortunate people might be, in developing countries. What do they care about? Do they need something that speaks out, allows them to send money living under a corrupt government, or to have privacy over their finance because of said corrupt government? It doesn't even have to be a corrupt government. It could just be that you want those features.
What verticals, Nick, then excite you in that respect for the potential of this mass adoption? Because we hear a lot about specific verticals right now.
So specific verticals,
for example, gaming, it comes up a lot.
Yeah. I would say that that's one of the things that I was interested in, is basically the tradability and the uniqueness in regards to digital assets. That's something I know. I know I've talked with Box Mining about that before. Michael's really big on that.
He loves the NFTs.
Yeah, NFTs. I mean, that's the thing. I think I looked at CryptoKitties, and the one thing I noticed is I was like, you know what? As we talked about before, speculation. That's one component, but just collectibles is a market that's very valuable. And to in a lot of areas in like Japan and South Korea, where digital assets and digital tokens are very commonplace, to have like digital collectible items and like statues and different types of
it's really exciting, because never before has there been the ability for you and I, Nick, to play a game and have more ownership through the NFT or the non-fungible token, and carry that through cross-game, not just cross-chain. But Michael did raise a point, Box Mining, and it's really valid, and that is always be aware of the centralized interest of the gamer, of the gamer who's created the game, because that's not going to go away. And so we have to find a way to ensure that those two interests meet. Otherwise, again, there will be no mass adoption in that respect, because we'll be hyping something that won't be practicable. So I just want to plug in for that, because you really did teach me in a conversation recently about that imperative. I also think, though, that the NFT will be valuable, because, again, it is exciting to open up that possibility, Nick, where we can monetize that asset and then transact and share that and house it, so that the centralized party in these additional assets we create don't own it. How they'll allow it, I don't know, but Box Mining is more the expert there.
Yeah, and I want to talk to Box more about it. It seems to be one of his passions, not to mention he can think in the persona of a developer, because he's developed games in the past. And when I was younger, I had a passion for it and stuff, but never took it to a career like he did. Box is definitely very skilled in that field.
Well, in terms of use case, Nick, I mean, I have children, I have 3 girls, and all of them are different ages and all wanting to do, like one of my daughters uses Roblox, for example. And it's very frustrating to me, because I'm always paying for these, pieces that they need digitally. And I always think I can't wait until there's a possibility for her to own some of these things that she's doing, so that she can then have a marketplace as well. I think that's important too. The franchises, opportunity, incentivization, a lot is afforded by the blockchain.
Yeah. I mean, I was just a few years ago, somebody I've gamed growing up and everything, but I never really got the idea of digital assets and games. It kind of threw me back. I'm like, who would pay for an in-game item? Because that wasn't just a thing in my generation. You usually had to like kind of earn your way to certain things. But I actually started to get it, because if you're spending so many hours in a virtual game, of your life, and not criticize anyone for that, but if you're spending, multiple hours in like a shooter game or an adventure game, it makes sense to want to like, make it special and have these items. And blockchain in the sense, I really like the for example, the first thing I thought of when people were bringing up this idea of digital game assets, I'm like, why can't the company just, store it in a centralized server and tie it to your user ID? But you brought up the point where it's basically you can have these items across multiple platforms that may not be developed by the same developer, that aren't under the centralized control of that developer in that case. So you can have something that can carry over through a variety of different platforms and games, which does excite me in that sense. Just having like a digital identity tied to that item.
Yeah, and it's going to be interesting to see. I think what's interesting also, Nick, is the user bases that these startups now have. I mean, we're talking about Engine, Loom, Cocos is another one I'm really looking into at the moment. And some of them have significant user bases. But then there's also the imperative of understanding whether that's going to cross over into these new blockchain-centric startups, because that is fundamental. With a brand must come users, and it can be chicken before the egg, but they do need people to be using this. And so many of these companies are so terrible at branding because they're not really. And this is another important point as well, Nick, I think is we need to talk about. They shouldn't be branding. A lot of them. And this is the big misstep that I think is that some of these YouTubers are going out to these companies and suggesting, because they're not ready. They're technologically not ready to go and spend all of their money with the very limited assets that they have on the brand to go mainstream if they're not ready for the tech. So it's a controversial sort of point, but certainly the reason I think many people go out and try and brand is to raise the capital, and then they go quiet, like we've seen with Dfinity, Hashgraph. All of it's proof in their lack of their inaction in the branding sphere, because they're busy building. It's the ones where they spend a fortune on branding now I actually worry about.
Yeah, I would say that marketing is not really important until you've got something ready to sell or to use in this case. I mean, it's important, I guess, in the capital raising stages if you're actually trying to build something fundamental. The thing I see though with a lot of these is you're mentioning this kind of idea of like a digital asset platform for game items. Exactly. Again, in order for this stuff to be adopted, you need to not know you're using this kind of platform. It should be something that you go through the traditional interface of interacting with the brands and companies that you're used to, and everything's happening in the background. And you have mobile applications that you're used to that give you the functionality to manage your assets, in this case, mobile wallets. It should be something that's so much in the background. So I don't think a lot of these platforms need to be marketing, especially if they don't have anything built out or they're nowhere near product ready for market.
The biggest question then is, if we already have the capabilities and the trade scalability for excellent games to exist now in a centralized fashion, and if the users are not proponents and don't care to be proponents of blockchain, why would they make the switch, Nick? Why would they utilize something? What's the benefit of a blockchain centric or blockchain based game, or let's say in other verticals like gambling or in finance, real estate, all interesting use cases. But is the carrot something more than just simply the technology? And what I mean by that is incentivization, because that's how I see it. I see that the one big offering that no other technology in the world yet can do is incentivization through the voucher system.
Yeah, I would say more than anything, there's a lot of applications that people try to toss on blockchain, and if it doesn't remove intermediaries or inefficiencies, or provide some type of benefit that wasn't there before, 99% of blockchain applications are going to fail because they don't meet those status quo standards. So for example, like you can talk about so many things. Money, I think, is still the first predominant one I always think of, but I'm beating a dead horse at this point by talking about how much I support peer-to-peer digital cash.
Yeah, but I think it's good that you dichotomized it, Nick, because you're clear about your value for the B2B and the P2P system for currency, but then you're also a proponent for business potential and platforms. Totally different conversations.
Yeah, they're completely different fields, and what are seen as the same industry of cryptocurrencies and distributed ledger technology. But I mean, it's very different focuses, because when you're getting into business applications, are you talking about, again, still something that's still to consumers in this case, as we were talking about, like a game item platform in this case? Right. That would be whether or not it opens up more than anything the opportunity not only to do peer-to-peer transactions and peer-to-peer market deals without a middleman taking a cut, but along with that, just the ownership, if that matters to people. And that's going to be probably more apparent and valuable over time. And then you've got things like supply chain logistics, or you've got, for example, dealing with legal contracts in this case. if you can cut out middlemen who take up so much time and inefficiency and cost in those procedures, you will save a lot of money. And
yes, I couldn't agree more. I was speaking with Origin Trail recently at length, and I felt the same way, Nick, because and I'll plug them for this because I am really impressed by it. I really liked the way in which they explained that many of the investors in their pre-utility value, being their voucher, were genuinely companies like logistics companies that want to use that token because they were pitched on it and they held it for that reason. They can prove it on the blockchain. So I thought, what a brilliant model to go and be able to prove. That's where the transparency really became imperative for an investor like me. I didn't invest in Origin Trail, but I would have looked if I was going to. I just like the fact that they stood up and said, look, that was our focus, that these guys wanted to hold until they can use. Because once again, it ensures the value long term.
It's one thing to have a partnership, and then you have a partnership where they have invested in the company or the token in this case. So yeah, I completely agree. I think that's very interesting. It's unique. You don't see many ICOs doing that, but
absolutely. Well, Nick, we could talk for hours, brother, but we can't keep going because we both have other things to do. But Nick, I want to say thank you very much for your time. I hope it's not the last time we talk. The idea obviously was for DataDash, a very much respected figure in blockchain and crypto research and education, to have a voice and let you know, and really just have a chat with him as well. So hopefully, Nick, we can catch up again. Is there anything you wanted to add, mate? Just as a final statement, something to let people know about what you're passionate about, what you're doing, and what you're thinking for 2019.
Well, I think I've talked enough about myself and my ambitions. Like I mentioned, I'm working on Project Genesis, but outside of that, Brad, thank you again for giving me the time to come on, man. Been a longtime friend. One of the more serious and, I think kind-hearted people in the space who really care about seeing things evolve for the long term. And going back to that point I made earlier, I think types like us who want to focus on more of the long term of this space are going to stick around. And who knows, maybe we can do some really cool things in the process.
I bloody hope so, mate. I bloody hope so, as we say in Australia. But it's, as I said to you, I really am fortunate, I feel, to have met people like you who are here. You're still here because the people support you. They can see that you are the real deal and that you give a shit about them. And that speaks volumes because you're rare in that space. And I wish you all the very best as you build out Genesis. I'm looking forward to learning more about it. And and as a colleague, more so than just friend, I really just wish you all the best to stay here. We need people to stay. And I really mean this when I say, I hope there is also opportunities for you, whether it be ambassadorships, whether it be the success of Genesis, so that you can also ensure that you don't have to go and get a job at McDonald's or, we want you around.
If the market keeps up like it is, we might have to.
Yeah, me too, I'm telling you. But it's been real. We have the real DataDash in the house. And until next time, Nick, thank you very much, mate, for your time.
Brad, pleasure's all mine. Thanks for having me, man.
You're welcome.